There we go. All right, Smurf, you good to go, brother.
All right, can you hear me?
Yep.
Hold on. Oh yeah, what I was saying was if you get like a daily candle and it closes above the previous day's high, the next day at 9 o'clock or at the open, you know how we get those big quick drops and then we bounce up?
Mm-hmm.
It's going to a 1 hour fair value gap every time. It did it today. If you look at today's price, that first candle, it dropped into a 1 hour fair value gap. It was a small one, but if you look over to the left, like I do it every single day. And the same thing, you can reverse it. Yo, first, like if it drops crazy, like let's say we got a crazy big bearish candle or something like that, and um, it closes under the previous day. The next day, that retracement where it's going is going to a 1 hour fair value gap.
Which,
Now, the
mhm.
ticket is this. Go ahead.
Yeah, which fair value gap? So that I can draw it. So
That's the Judas. Okay, let's look at today.
Mhm.
Uh, it's from Monday. Monday, if you look over to the left, let's see.
Monday.
Got my phone with me.
Yep.
That if you look to the left on a 1 hour chart,
Mm-hmm.
you will see a fair value gap right there.
There's a
Can
few.
you see it?
There's a few here. So like which one so that I can know to like put it out and everything like that.
Uh, the one that was made Monday 11 a.m.
Monday, 11 a.m. Yeah, I see this right here.
Yeah, but if you back test that, and like just look at
Mm-hmm.
that's the first draw on liquidity every day. That's the Judas swing. And then if that 9 o'clock candle closed bullish, 10 o'clock gonna take off. 10 o'clock is taking off. It might retrace a little bit, but it's gonna take off. Like so basically it's like it goes back to what you're saying. It's like it does two things. It seeks internal range liquidity, which is the 1 hour order block.
Yep.
Then what it does, it goes and it takes out a 1 hour high. That's the higher high that it's making. The lower load or the protected low that it made was when it went down into that 1 hour FEG.
Mm-hmm.
And then when it expands, is going to take out highs. Like today, I was bullish. The only short I took was to the that 1 hour. Did I even short? I don't even think I shorted today. But if I do short every day, I mark out. I got the 1 hour FEGs on my chart, but not
Mm-hmm.
for the open. Like if I'm bullish, I'm looking for the discount 1 hour FEG. So
Right.
I mean, you know what I'm saying?
Yeah.
I
You
just
looking
want
at?
to go ahead.
Yeah, go ahead,
I
AB.
was gonna say, are you looking into the Asian and London sessions? Just so.
Yeah,
All right.
absolutely. Especially if we got like London lows and stuff like that. I love it. Like I'm looking for the 1 hour FEGs that's like resting under those lows, those London lows or Asia lows or whatever it is. Or if I'm bearish, that first move should be up to take out maybe some session highs or something like that. And then it's probably and then tracement. One get into that 1 hour FEG, that first draw on liquidity, that right there is where you should be looking to, find whatever setup you use. But pay attention to that and back test that.
Definitely, definitely.
Copy, copy.
Yeah, a lot of the stuff that Smurf is talking about is a little bit advanced for those that are still new. So let me just cover what a fair value gap, right? So we cover the order flow, we cover the market structure, and we also covered a bit of liquidity. Again, liquidity just is basically you will find liquidity at these points because I really want you guys to understand this. Liquidity, you're gonna find it at, for example, previous highs, right? So previous highs and lows. Those are going to be your areas of liquidity. Also, any swing points, right? Any swing points will also be areas of liquidity. Any relative or equal highs or equal lows, those are also areas of liquidity. So, like for example, all this here. Let's see here. Let's see if we actually. There's a bit of liquidity here, right? Just based off that low and what happened here. this got purged right here, right? All price do was pierce through it, take the money and keep going. Take the money, keep going. Take the money and then go after other sets of liquidity as well, right? So liquidity is what drives the market. It's not the support and resistance. It's just areas or levels in which the market is going to go to be able to keep going, right? Now, the third concept that you must be able to understand to be able to understand just all these different models, because this is like kind of building a house. For you to understand how to read the market from a market maker standpoint, you got to be able to understand liquidity. So here we have the floor, right? And then from there we bake, have knowledge when it comes to imbalance, and then have knowledge when it comes to order flow. Then from there, you can build on your own type of models. There's different types of models with these different concepts, but you must be able to understand them. So the other area that I really want to talk about is called areas of imbalance. So anything that's in balance is basically that price moved too quick and it left behind a gap, right? So more than oftentimes people talk about a concept called fair value gap. So a fair value gap, it basically means area in price where there was no fair value. So it is comprised of three different types of candles. So it's going to be like this. 1 second. Right. So this could be one right here. Right. And I'm going to change it just a little bit. Just bear with me. And then we're going to have a second candle. That candle is going to be the expansion candle. And I know that my drawing is probably not the best here. And then we have a third candle. This third candle can be many different things, right? But as you can see here, this right here is a bullish fair value gap. Well, what we are able to see is that there is a gap between the low of the third candle and a gap between the high of that first candle, leaving this area right here. So as you can see, there's a whole bunch of area here of price not really providing fair value. So what's going to happen? Well, more than oftentimes when price goes ahead, and the market going crazy right now, when price goes ahead and creates that new higher high, this is what we mean by price goes ahead and retraces. The reason why price is retracing is because price is picking up those orders that it left behind. So let's say higher high, right? Price is going to come where? Into the fair value gap, and it is going to basically balance price out, and then from there continue going forward. So that is the reason of the higher low. The reason of the higher low is because price is rebalancing. That's all that price is doing. Same thing, vice versa. Vice versa, let's say, for example, we have a bullish fair value gap. So a bullish fair value gap is the exact same thing. First candle, then we have, and I'm going to change here just the color. Right, so we have our first candle. That first candle will be followed by another candle. That'll be our expansion candle. And then the third candle could be whatever, right? But again, and sorry for the drawing here, but again, the main thing to note here is that there is a gap between the low of the first candle and the high of that third candle. That is the reason why oftentimes you will hear everyone talk about, but no one really talks about the why. Why is price really going there? Well, the reason why price is going there is because once we make that new lower low, price is going to make a lower high to be able to pick up those orders and then be able to continue going down. Drop a 1 if you want to see an example of both working, of both things working. A bullish fair value gap and it respecting price and price going right back up, and a bullish fair value gap. Okay, so bearish fair value gap. So let's go ahead and into today. We had a couple of different opportunities. And by the way, I trade off the 1 minute time frame. Like, honestly, there's lots of days that just with fair value gaps, honestly, with fair value gaps, just knowing that, you should know where price is going to. In my opinion, all you need is the following. First thing, liquidity. Where's liquidity? And fair value gap. Once you're able to understand that, I truly believe that with consistency, you can really become very, very profitable over time, right? So here we go. And Mark, that's a really good question. So let's go ahead and talk about this one right here. So first thing we have here is that these are my London highs and lows. So we have different sessions right now at 7 p.m. or at 6 p.m. Now we have the Asian session. Then we have the London session, and then we have the New York, US America session, right? So we can see that prior to the market opening, we have these key levels of liquidity. We have this high that was formed at 3 o'clock in the morning, 19,989, and then we have this low. So we care about these different lows. Now, something else that I do in every single morning, I go to the 15-minute time frame, and I try to look at other areas of liquidity. So aside from the highs and lows of the London session, we also have this high right here, and we also have the high of the Asian session. So for now, all I care is about that. I'm not going to bombard my chart with 3,000 levels. It's a waste of time. And for those that want to argue with me, listen, I got time. We can argue all you want. It's a waste of time to have 3,000 levels on your charts, and then you can even see price, right? So first thing is 9:29 price, market is about to open, and what happens? 9:30, right? We wick. When something like this happens, I'm not just going to go ahead and say, oh, it was a liquidity sweep. I try to wait a few minutes afterwards. And once I see something like this, that we see a body closure right above, now I try to wait for the next candle. I'm not getting in there. You never want to get in there. Why? Because the probability of you losing is 1,000% instead of 50%, right? So if we wait for the next candle, what does the next candle create? Anyone? What does the next candle create? Okay, higher high. Yeah. Fair value gap. Is this a bullish or a bearish fair value gap?
Bullish.
Bullish, right? So here we go. So now all we have to do, and again, I will share with you guys a whole bunch of different indicators that will help you out with this stuff. But all I'm doing is I'm taking the high of the first candle and I'm connecting it with the low of the third candle. That's all that I care about. I don't care about anything else. Why? Because this is telling me a story. What is the story that this is telling me? Well, it's letting me know that price is moving rapidly with, it's making a impulsive move towards the upside. I want to be in the know. And on top of that, we also have what? A bullish fair value gap. We said that once price makes that higher high, more than oftentimes price is going to do what? It may continue going up, but ideally what I want to do, I want to see price trade back into that fair value gap. Right? And it can even be that right there. And honestly, even this right here, to be honest, let's say, for example, I would have bought with 4 contracts right here, right? And the reason why I'm buying is because price came back into the fair value gap. And now what am I going to target? I'm going to target the last high. It's that simple. I'm targeting the last high. If price is going to continue going higher, it has to break the last high. It's that simple, right? So I'm going to go ahead and put my stop loss. Usually I put my stop loss literally just a bit below the first candle's high. So I put my stop loss right there, right? If I continue playing it, price comes back. As long as price is wicking, by the way, let me go ahead and just quickly just zoom into this. As long as price is wicking off the fair value gap, there's something called disrespect, and there's something else called respect, right? So as long as price is wicking and we're still kind of pushing up higher, it lets me know that price is looking to continue off higher. And all that price is doing there is just rebalancing. Why? Because we created a fair value gap. So I'm still in the trade. I'm not panicking or anything like that. And what am I doing? How come price goes right to it? How come price goes right to that last high? Because that's the last liquidity. And it also respected the fair value gap. That would have been a what? 1 minute, 2 minute, 3 minute. If you can't wait 3 minutes to make, this is 4 contracts, 1860, trading is not for you. Go to Vegas, go catch a lick somewhere, go do whatever the hell you want to do, but trading will not be for you. Trading is for those that are being patient. Patience is everything. And once you understand these concepts, you can damn near say price is going to go to 22.32, and it will definitely do that. Why? Because when everything aligns based on institutional concepts, it will definitely happen that way, right? So that is one example there. Oh, because the algo says so. That is one example right there of how the market is able to respect price from the fair value gap and how you're able to use that fair value gap. As long as we are respecting it, we are pretty much good to go. Something else that I really like to teach and talk about is the following. You see how I have a middle line in the fair value gap? That middle line is my 50%. It's the 50% of that gap. So what does that mean? I don't really want to see candles closing below that 50%. I want to see candles closing above the upper half of that gap. And by the way, for just so that everybody knows, this is actually another term. It's CE for consequent encroachment. So consequent encroachment, Francis, I'm getting to your question. Just give me 1 second. Consequent encroachment, that is the 50% of the fair value gap. I want price to stay right above it. You jumped in once it wicks, correct. Once I see a wick like this, like wicks like that, and ideally this would have been the best entry right there, that second one. Why? Because price pierced into the fair value gap and it closed right above it, and then it went right off of it. Ideally, to be honest, my stop, I try to have a tight stop loss, but here's what happens more than oftentimes. If you put your stop loss right here, I can guarantee you there's going to be a lot of trades that you're going to get cooked. Why? Because the market knows people are putting their stop losses there. That is the reason why I try to go just a tad bit lower than the high of that first candle. It is a big stop. It is definitely a big stop. And I can guarantee you in futures, if you want to put a stop like this, then be ready for lots of continuous loss. And if you win, it's going to be because the market was definitely on your side that day. So futures, as you can see, lots of wicks, you need to have some sort of breathing room. Okay. I do know that we have 7 minutes left. Let's go ahead and cover a bearish example of how we're able to use this. And again, we're going off the 1 minute time frame. Let me just see real quick if I have anything here. There was one that we caught earlier today. Actually, let's go off the 15 minute. Yes, anytime. And again, that is all you need. Liquidity, fair value gap, and knowing the highs and lows of the sessions. Anyone else tells you anything else, honestly, you're complicating yourself more than anything. Let's go for a bearish fair value gap. Okay, here we go. This is a good one. So we're going to focus here. So we're going to focus on this right here and why this was a good trade. So first, let's go here. Is the algo available on NinjaTrader? It's not available on NinjaTrader. We tried. You guys got to understand C# is a problem. NinjaTrader is probably the buggiest platform on the planet. Those developers, they should honestly just all go somewhere else because they don't even know how to code. But we're trying to actually create a ICT or an institutional algo that would hopefully replace the level of algo. The level of algo is 1000% made off of retail trading strategies. I will be very transparent about that. We just want to make it better. We're trying to make it better. Is that NinjaTrader it's a mess. It's a mess. Well, here we go. What do we see here? We have, right, a new low. After a lower low, what comes after that? What comes after a lower low? Lower high. Because this is a new low, here are the things that I care about. I'm trying to see where are my areas of imbalance that price may go to be able to go down lower. And what do we see here? We have a bearish fair value gap. So for me to take a trade here, I do not want price to close above the 50% of the quadrant. And yes, by the way, this is the first session. We're going to do a lot more. We're going to do a lot more. Today was just more of a recap, and I wish I had more time today, but we're going to do a lot more of these sessions, right? So if we continue till the next candle, we see that price is now coming up towards that fair value gap, that bearish fair value gap. You could have easily gone in there. Ideally, I would have gone in right there. Why did I get in? Why would I get in right there? And let's say, for example, I would have gone in for a sell right there. My take profit is where? Where's my take profit? Yes, and market structure shift as well. Where's my take profit? Francis, anyone? Zoe, where would you put the lower low? Why? Because you know price has to go there. Price has to go there. It's that simple, right? So take profit would have been 1,460. Let's say I think it was Francis or Greg that said it's too much of a big stop. Then my stop loss, then put it at the 50%. Just put it at the 50%. Let's see what happens. Price comes down. And what does price hit? Price hits our lower low. And this is how you're able to have consistent days practicing a model that works, just using fair value gap. The reason why fair value gaps are so important is because it's telling you a story. It's just like coding, okay? If bullish, right? Price creates new higher high, right? And price respects bullish fair value gap, that equals entry. That equals buy. If bearish, right? Price creates new lower low. Price respects bearish fair value gap. We sell. Questions, comments? Okay, got a couple questions here in the chat. It's big because it's the 15 minutes. Yeah, and it's big because of the 15 minute. Yeah, 100%. So FBG candles are usually long candles. It's a 3-candle pattern. Number 1, number 2, and number 3. There's a gap between the first one and the third one. That's just basically an area where price was not delivered in a fair way. That's pretty much it. And we're trying to see that as long as price respects it and we are not closing above it, we are getting into an easy sell, right? Now, let's continue here. Another example. Same fair value gap, by the way, right? Price is trying to, stay up and hopefully come back up. I'm still using that fair value gap to tell me what price is going to do, because price may still wick and come back down, right? So what do we see? Price is coming. Here, I'm interested to see what's going to happen, right? You see how here price is closing above, almost above that fair value gap? And what does price do right after? It comes back down. This is why a lot of people say the 50%. Here's the practice that I want you to follow. For you to be bullish here, price has to close above the first candle's low. The first candle's low. Did price close above the first candle's low? It never closed above the first candle's low. There you can enter another sell, to be honest, because that's basically telling you that price is respecting that fair value gap. And what do we see? Price is going to continue. And what am I going to target? I was going to, before I paused it, I was going to target right here. Why? Because that's the last liquidity, or that's the last low. And what do we see? Price goes right to it. That would have been about a 3K trade. So let's say we would have sold that, almost a 5K day. Yes, I'm putting in 4 contracts or whatever, but this is the concepts that I really want everybody to follow. I know it's 7 p.m. We didn't get to the models yet or anything like that, but just quick gauge when it comes to the audience. Drop a 1 if this was a good recap for some of you guys. We're gonna come up with models, and honestly, what I really want to come up with a kind of like a trading handbook. And let me show you guys something. And let me know if you want me to show you, if you want me to give this to you now, or would you want me to solidify it? So when I was learning all these different things, I came up with this manual for myself that I knew that I was going to later on then provide to the entire level of community. But here's what it is. So this manual covers market structure, market structure shifts. There's a lot of things that I wrote here from my own findings. There's a couple of examples. We cover PD arrays, the different points of interest that price is either going to react off. I cover PD arrays one more time. I cover fair value gaps. I cover breaker blocks. I cover rejection blocks, ICT order blocks, warrant order blocks, inverse fair value gaps. How many of you guys want this right now? I'll drop the link right now if you guys want this, but promise me one thing, you guys are actually going to go ahead and study this. If you guys are just going to put it as another thing to bookmark, trust me, I put a lot of time into this and a lot of, chart hours. So let's go ahead. I'm going to put you guys where you guys can view, and I'm going to drop the link. It's to the point, I'm not even going to drop this link in the VIP chat. This is just for you guys that were here as part of the webinar today. But again, I really want you guys to go through this, because once you are able to understand liquidity, fair value gaps, and things like that, this thing really becomes second nature. And just off of fair value gap respecting or disrespecting, you'll be able to know what's happened next. As a matter of fact, let me show you guys something. Let's say, for example, we take this to the daily time frame, right? Let's go here. You got to understand this. Why did price come here? Well, why did price... let me go back one more time. Let's put it right here. Why did price bounce up here? Why? Why did price bounce up here? Well, we had one fair value gap. Yep, good. Good, Smurf, good.
We can't see your chart, bro.
Oh, you can't? Oh, sorry about that. Yeah, I was sharing. There we go. Yeah, why did price go ahead and do that? Again, we are focusing on what? One single price leg. And off that price leg, all you have to understand is this. Off this price leg that I'm looking right in front of me, where is price going to go to? What point of interest is price going to go to be able to retrace and come back up? Why did price come here? Well, price came there because if I just turn on this rectangle, I'm able to draw that we had what? Fair value gap right here. Another small fair value gap right here. And you see how even in these bullish fair value gaps that you're seeing right on your screen, there you go. Put it green. You see how this candle right here, this candle never closed below the first high of that first candle. If we would have had a close right here, I would have said bearish. Off rip. Off rip, I would have said bearish. But because all we did was what? We picked up orders. We picked up orders. So all we did, listen, if you would have gotten into a swing with one contract, just knowing what a fair value gap is, and let's go ahead and do it, right? We go up, we got a fair value gap here. Price comes into it. We are still respecting. What's next? Once I saw that right there, you swing. You swing. Why? Because it's literally telling you price, all it did was pick up all those orders from those bullish fair value gaps. And even if you wanted to be very, I would say, conservative, what are we targeting? The last high, because that last high is where the liquidity is at. So with one contract that you would have swung, let's go ahead and play it. 1 day, 2 days, you would have been up already. 3 days. So you're telling me in 3 days of a swing, you would have made $9,000 knowing a simple concept, which is just fair value gap. So whether or not candle is respecting the fair value gap. That's all that I have for today. I have a lot more, but I do have a hard stop right now. How was it? Drop some ones if you guys enjoyed it. Again, I do a lot more than just this, but this was a recap. This was really a recap. And honestly, I was trying to see where's everybody located. Just drop where you're located, because we might even do an in-person workshop, like a 2-day in-person workshop. So I see Atlanta, Philly, charting as we speak. Atlanta, Miami. Okay. What do you think? What's best for everybody? If we meet down south or if we meet up north? You guys know that I travel back and forth between New York and Miami. I see south, I see north, south. I see lots of south for sure. Okay. Because I truly believe that if we take a weekend, Greg, I truly believe that if we take 2 days, One day where we truly focus and we cover absolutely everything. And then the second day where we cover the first half, and then the second half, we go chill somewhere, we go to a beach or something, or we, do something fun. But I truly believe that it doesn't take that long to learn this. The reason why the institutional stuff takes long is because you got to put a lot of hours. But I truly believe that with someone like myself, like Martin, like Aaron, like Lay, and the rest of the team, that we can actually come in front of you guys and show you what you need to know to be able to expedite that learning path. I think we could definitely do that. Yes, this will be I will go ahead and drop the recording as soon as I get off. And did this handbook that I did show to you guys, I'm gonna continue to add stuff. There's a lot more stuff that I'm gonna talk about. And also, let me show you guys just the last thing, because I really want you guys to get excited about these different things. You want to know why this fair value gap right here never got touched? Just FYI, there's different types of fair value gaps. There's different types of fair value gaps. And it all depends on the third candle. This fair value gap right here is called a breakaway gap. So because what makes it a breakaway gap? What makes it a breakaway gap is that the third candle closed above the high of the second. It means that it will be a very long time until we come back to this. So whenever you see this, this is how you are able to get into automatic buys, knowing that price is never going to come and retouch your stop loss. So again, today was very basic and just getting things going and kind of changing you guys' mindsets from retail to now seeing institutional. But we're definitely going to do part 2, hopefully next week. And we're going to cover more of the model. And then from there, we're going to cover more advanced things. So I truly hope that you guys put it today.
The people said they're ready next week, bro.
Next week? Let's do it. Yeah, for sure. Wednesday.
I don't know if they're ready, but that's what they said.
Let's do it for sure. And like I said, we are creating a algorithm out of this. And actually the model, this last thing, there's so many different things that we got to cover. And it's been quite some time since we've been able to speak, to be honest. But let me just show you guys something real quick. This right here, the model that I shared, I think it was Thursday night or Friday night. Please go back to this. I'm not even joking. Like, shout out to Vincent for trying it. It worked as well. I even used this model in the Asian session, to be honest. Like, to be very, very honest. Right now, we're looking to automate this as a bot and then have a bot basically trade it. That's what you want. Someone say this. I don't want to be in front of the computer all day. Like, I really want you guys to understand that the way of freedom when it comes to trading is automation. I don't care what anyone says. Once you have a repetitive process, a repetitive system, a mechanical model that you're able to follow every single day, automate it. Automate it, put some money into it, and go do something else, right? So we're going to show you guys how that model right there that works, we're going to turn it into a bot. And then we're going to show you guys how we actually create bots as well. So I think this series right here is going to help you guys learn how to trade. But then on top of that, be able to learn the concepts to then learn, implement a model and then have that model be automated by a bot. And then you're pretty much good to go. So appreciate you all. Thank you. Happy Tuesday. If I don't speak to you guys before the 4th, happy 4th. Please stay safe. You guys know it get crazy every single time. If you don't want to go outside, don't go outside. Play the crib. That's about it. Thank you, guys. I appreciate it. Thank you.